Right. Hello, everybody. And, this is a kind of a part two off of what we covered last week. We're obviously here today with Prosperity Tax Advisors. My name is Curtis Johnson, and I'm a co-founder of Better as well as its chief strategy officer. And here's the thing. It was so interesting. Jeff and I were having a conversation this morning. Jeff Levitan, in case anyone doesn't know which Jeff I'm referring to. But we were sitting there and talking specifically about Prosperity Tax Advisors. And he made an interesting observation. And I think it was kind of off of the concept of what this training is really going to cover. But the point he was making was that it does kind of make sense. If we don't understand, and I say we as a collective, anyone who's in the financial space, because even, I am to a loose degree, but a lot of you are very much invested into the financial arena. Anyone who was on this morning's pro call, the sales huddle, we were talking specifically about, what is your core focus and really understanding it and understanding the details of it, and like, how do you really help a client if you don't understand all the parts of it, and getting into some of that. But he was talking about it in relation to financial reps or anyone who's in financial services, a financial professional. It's going to be very hard for you to give, call it good advice or complete advice, if you don't understand tax or you don't understand accounting. How can you really tell someone if an investment is a good choice or if they're well structured for retirement if you don't understand a little bit about, one, if they're a business owner, how their books really work, or if they're just any individual who pays taxes, which, as Ben Franklin would say, there are two unavoidable things. I think he was attributed to saying this. I think I've heard 7 versions of this, but the unavoidables are death and taxes, right? So if everyone pays tax and you're looking to help someone understand their financial position and you don't talk to them in any way about tax, it's kind of an incomplete picture. And, that doesn't mean that you can't obviously do a good job, but you're probably better off by understanding some of these pieces. So that first training that we had last week, ironically, Mafa just popped in. Mafa's not the key speaker today. We're going to get to hear from one of his amazing CPAs. But we were talking about the general picture across the boards with Prosperity Tax Advisors, and it seemed like a lot of people had interest in understanding accounting a little bit better. Bookkeeping, accounting, what should a business owner expect in this space? And Stephanie sent me over what she is looking to cover, and I'll dive into who Stephanie is in a second. But she's going to be our presenter today, and it was pretty mind-blowing. Even just me reading through the presentation, how much better I understand the topic of really what is an accountant supposed to be looking at? What is a bookkeeper supposed to provide? How does a business owner even manage their company without financials? And you'd think that that's a crazy, statement, but most business owners out there do not have financials. They don't know what's doing good in their company, what's doing bad, to simplify it all the way down. So I think that anyone who's on this call will walk away with such a better understanding of this topic, but also just, even if you never use it directly and you just have it in your back office, or what Prosperity Tax Advisors knows, you might be able to help your clients a little better. Maybe. We'll see. But today we are going to hear from Stephanie Vorwig, who is she's a forensic accountant. Forensic being, hey, let's deep dive in there, find cases of forensic. Really, we're talking about criminality, finding instances of people doing shady things in their books, which, she does that very well. One of our reps sent over a case where, Stephanie, I think you said you found, what was it, $4 million of fraud in your first day or two?
Every day it gets more. Right now it's up to 7.2 million. $
7.2 million of fraud in one of our one of our better reps is a is in bookkeeping and is working closely with PTA on what's becoming very quickly a criminal case where they're doing a 20-year look back. And one of the partners kind of got wind that the other partner was being shady and hiding money. And so far, like she said, $7 million. So Stephanie is she used to be with Deloitte, which is one of the the second largest, I believe, tax firms in the world right now. Definitely someone who, just by sending clients her way, I've learned so much about this area, and someone who takes a lot of care for every client she works with. She specializes on digging into the book side of it. PTA has other CPAs that work on the filing side, but she handles really, okay, let's make sure that these books make sense, that things are going through the company the way that it should, and that it's all properly documented. So I couldn't be more excited for everyone to learn about this topic from someone who is the definition of a professional in this area. So Stephanie, thank you so much for taking the time to help our squad understand this topic better. And I'll turn it over to you.
I'm going to go ahead and share my screen. Is it visible, Curtis?
Yes.
Okay. Okay. So this is just going to be my attempt to make accounting as simplified and as exciting as possible. So any questions or interruptions or notes, just let me know. But so are your clients' books increasing business insight or adding business confusion? And honestly, in the small business world, lots of them are just adding confusion. So, I was told to do my brag slide. So here's my brag slide. And I will admit that's a very airbrushed picture of me, but I do have over 20 years of progressive experience. As Curtis mentioned, I began my career with Deloitte & Touche in 1999. I graduated from University of Florida. And at that time, it was in the top accounting schools. It still always has been. I believe it's number 6 right now. And then I was issued my CPA in 2001, passing all 4 parts in the upper percentiles. And now I'm going to move on where I don't have to brag about myself. So what's very, very interesting, and some of you have already heard about this in the news, but the IRS, in order to increase their revenue, have hired so many more agents. I think I read the last time was 80,000 new agents, and they have also introduced artificial intelligence. So we need to stay not only with them, but ahead of them. And so my firm has engaged AI technology in our software and in our tax strategies. So that's great. We can use AI in our tax strategies, but if you have wrong books, we can't offer you the best tax strategies. So a lot of business owners are missing a key to stay ahead, and that is accurate financial statements. And in order to have accurate financial statements, you need to have your accounting practices perfect. The majority, this is unbelievable statistics, but the majority of small businesses fail within the first 5 years. And the number one reason is poor cash flow contributed to bad and inaccurate accounting. So what happens with a lot of small business owners is that you have bookkeepers and then you have CPAs, accountants, and the bookkeeping is not regulated at all, like the CPA, legal, or medical industry. Anyone can wake up any morning and say, I'm going to be a bookkeeper. So in order to keep costs down, a lot of small businesses will go with a bookkeeper and not know that that bookkeeper is not accurately trained. Many of them are. There are amazing bookkeepers out there. I'm not saying that there aren't, but there's a lot of bookkeeping mistakes. So what happens when you go ahead and you invest in a good bookkeeping and accounting team? It's going to mean a lot of things that we'll go over in this presentation. One of my favorite case studies that I did is I had a client that did not have a bookkeeper or accountant on staff. He waited about 8 years until his revenue got about $15 million gross. And he said, things aren't looking good. So he hired me as a consultant. And in less than 1 year, I was able to increase his gross margin by 30%. He was in the manufacturing sector. In fact, his biggest customer was Restoration Hardware at the time. And I implemented a zero-based accounting system, which couldn't have been done in the manufacturing sector without implementing an inventory management software. And also looking at his pricing models. He had a 50,000 square foot warehouse with Restoration Hardware, his number one customer, and did not have a good accountant. And so again, within a year, we were able to increase his gross margin, and he is still running a highly successful business.
Stephanie, it might be, I think some people won't know what this term is. What is zero-based accounting?
Zero-based accounting, great question, is when somebody has nothing, absolutely nothing. They're not on QuickBooks, they're not on a software. They're just running by their bank statements, and they might hire a bookkeeper and they simply give them their bank statements, and everything that's a cash deposit, the person puts in as revenue, and everything that is a check they put in as expenses. And we all know, just from running our personal finances, that's not necessarily true. So that's what's called a zero-based accounting system. Some people already have QuickBooks implemented and it's not implemented correctly, but a zero-based accounting system is probably the worst situation to be in because you really have no visibility at all to the accuracy of your operations and financial statements. So most bookkeepers, and again, I'm not knocking all of them. Curtis will tell you there's tons of amazing bookkeepers, but many bookkeepers do not fully understand accounting principles, let alone tax laws, and therefore they're producing inaccurate records. And 60% of all accounting errors are the result of basic bookkeeping mistakes. One of the major things I have found in my career is most bookkeepers do not reconcile your books. And I will explain that in a little bit more detail in a couple slides from now. But the reconciliation process that we're taught as accountants will find almost all of your accounting errors. And in fact, if a client is on QuickBooks and you ever have one, my team in 3 simple clicks by looking at QuickBooks will tell you if your bookkeeper is reconciling your books. And I can't even tell you how many times there's been a business owner that tells us, oh no, my books are reconciled, we're good. And I go and do this process and I tell them, no, that's not true. We actually had one client whose bookkeeper swore up and down that the books were reconciled. And in 3 clicks, I said, your major cash account is off by $500,000. And he had no idea. So these are the types of things that can happen. But what Curtis wanted me to do, and I had presented to Better Apps before, is really just start off with the basic terms of accounting. Again, it's not a sexy industry unless you're like me that loves it. So we'll go ahead and we'll start with some of the basic terms to get you started. And in order to make it simplified, I'm going to put it in the terms of your household. So what I was talking about that reconciliations aren't done is the definition of reconciliation refers to the process of comparing 2 sets of records and making sure that they're correct. So an example would be is if your financial statement says that your cash balance is 100,000 and your bank statement says it's 50,000, that $50,000 needs to be explained. And for people my age and older that used to run around with that manual checkbook and check everything, that is reconciliation at its basic terms. But you're making sure that the underground financial supporting documents will be reconciled to your financial statements and you explain the differences. So an outstanding check is something that we've probably all heard of. So a check hasn't cleared your bank, and that is a reconciling difference, but it's an accurate reconciling difference. So this slide is basically telling you that through QuickBooks, you can put all your financial institution records and it goes straight up to QuickBooks and it gets into the software. My gardener's behind me. I apologize. They always come at the worst time. So this would be a perfect example where your American Express card says that you paid $23 in materials and so does your QuickBooks, but many times that's not the case. So any difference in what is on your credit card, loan statement, bank statement, this needs to be explained if it's different. Does that make sense? So now we're going to go into the 4 financial statements that accountants are trained to do. And if you were to go to any public company, they have to report all 4 of these financial statements according to SEC laws, et cetera. So the first one is a balance sheet. So people might have heard of it, but what exactly is it? It's basically the financial statement that reports a company's assets, liabilities, and shareholder equity at a specific point in time. You can actually do one at month end. You can do one on a day. It is a screenshot of where your assets, liabilities, and equities are at that point in time. And I've got a little formula down there, which is the basis of accounting. Assets must always equal liabilities plus equity. I'm going to that a little bit more. If that formula is not matched on all of your financial statements, something is wrong. So here's a very simplified balance sheet, and I'm going to put this in your world. So let's say this is the balance sheet of your household. This is how much cash you have. This is the cost of your house. These are all assets. So your house would show up as an asset. Your cash would show up as asset. If Aunt Mildred owes you $40,000, that's an asset. She owes it to you. And then over on the liability side would be credit card debt, the mortgage you have in your home. And what would be the equity? I thought this most simplified way of stating this is that if you have a house for $500,000, which would be an asset, and your mortgage balance is $300,000, which would be a liability, the equity in your home would be the difference of $200,000. And that's that formula I just told you. Assets equals liabilities plus equity. So everybody needs to have a balanced balance sheet, and you can see assets equals liabilities and equity right there. So that is the balance sheet.
Now, really quickly before we go into that, I want to make sure that that makes sense to everyone, because I think, Stephanie, correct me if I'm wrong, but that is probably, to a layman, to an average person, that would probably be the most confusing and not sensical concept as an equation, because you would think assets would never equal equities or equity plus your liabilities. That just doesn't totally seem to add up. But the point is that they're accounted for on both sides is kind of the way to look at it, right?
Mm-hmm, mm-hmm. Everybody thinks accounting is math. It's literally a science based on that equation. I don't want to get too boring here, but that one equation throughout all of the financial statements is how you can ensure that everything that is reported is correct. Does that help?
Awesome.
Good step. Okay.
Yeah, no, and if anyone has any questions, please make sure to put them in the chat. We want to make sure you all understand this. This is a very important topic. Thanks,
Yes.
Stephanie.
And also, again, as I go through these, if you have a client and their accountant isn't producing one or all four of these, they are not doing their job. And you can't produce all four of these financial statements without the reconciliation, which is why we started the presentation with the reconciliation process in the beginning. So the next financial statement, which I'm sure many of you have heard, is called an income statement. And it's also called a P&L, which basically is profit and loss. They're the same word. It just, so if somebody says income statement, P&L, profit and loss, it's the same statement. And that basically just shows all of your revenues and all of your expenses and what your net income is. And that's going to be through a certain reporting period. So a good accountant will provide that on a monthly basis, a quarterly basis, and absolutely on an annual basis. So here's a simplified income statement. And again, I'm going to put this in household terms. So if this was your household income statement, these would be all of your wages, your W-2 wages, your 1099 wages. Your operating expenses would be things like your electricity, your car payment, and then you would also have your any interest, any tax, and that would be what comes up with your net income for your household. Any questions there? Now this is
Let us
a
know
lot.
if you're following. Give us some kind of indication on the chat, because I know that this can be a complicated topic, but it is also, I want to make sure everyone is following. Put yes in the chat if you feel like you're learning something, getting this topic, and you understand it. I just want to make sure we've got everyone on the right page here. Good. We got a bunch of people saying yes, yes, good, good, awesome. All of the above. Love it. This is great. Good. It
For
looks like
some
yeah, Miguel. Yes, devouring. I love it.
for some reason, I'm not. I last time, Curtis, I was able to see the comments. It's not working now. So, anyways, just interrupt me if
Oh,
there's something. Yeah, I don't know why.
I'll fix
No
that.
problem. I don't mind interruption. I believe it's communicating. So, a third statement that is required that I would say most people aren't familiar with is the statement of retained earnings. And that is the, well, earnings, we're going to define that is the profit that a company produces in a specific period, usually defined as a month, quarter, or year end. But what is a statement of retained earnings? It's not just earnings. So the word retained in the accounting world and the regular world is what is kept in the company, what is not distributed to the company. And that is also part. So you've got retained earnings. Don't worry, we'll get to an example. And so it shows what dollar amounts were retained into the company, meaning that they were not distributed to shareholders in public companies. They were not distributed to partners in LLCs. It is just retained by the company. It's also called the statement of changes in retained earnings, and this summarizes the changes in the retained earnings over a specific period of time. So it's the cumulative amount of the net income that a company has retained rather than being distributed. And here's a very, very simplified. So you have your beginning retained earnings at the beginning of the year. You add your net income. And when I'm going through all these financial statements, you have to remember that this number must tie to the net income on your profit and loss. So all these numbers tie to each other's financial statements, following that basic formula: assets equals liabilities plus equity. So in this simplified retained earnings, this company started with 50,000. It had net income. It paid its partners, let's say, $20,000, found a couple of adjustments, and then they ended up with $135,000 ending retained earnings. So that is a statement of retained earnings. And again, an accountant should be producing this for you monthly, especially if it's a partnership with more than one partner. You're able to say, partner A was distributed this much, partner B was distributed this much. Why are those amounts different? That's very important to know in partnerships, especially if they go awry, which I've seen, like the case I'm working on right now. And then the fourth statement, which I would say not all accountants do this monthly. I find for a smaller company, it might be redundant, but it needs to be done quarterly or annually. And the statement of cash flows basically breaks down all your outflows and inflows of cash among three activities: operating, investing, and financing. And when we look at an example, I'll put that again in your family's terms. So it's separated cash flow from operating activities. So an example, let's use that electrical bill again. That's just something to help run your household. From investing activities, that's if you go and buy a second house, that would be investing because you're hoping to make money on that house. And then financing would be any payment of loans, any repayment of loans. And then you see the beginning balance of cash needs to tie to your balance sheet, and the ending balance of cash needs to tie to your balance sheet, but it breaks out all the cash. Between all four of those statements, if they tie, you have 100% accurate picture of your financial records and your company's health. So again, all balance sheet accounts need to be reconciled, but they should be reconciled on a monthly basis. We have one client who hasn't been reconciled for 6 months, and I think we're going to find things that he would have liked. I already know we would have found things that he wanted to know earlier. So by doing it in a timely fashion, you're able to really get to things faster, including minimizing expenses. In fact, the client I was just talking about, because his accountant hadn't produced income statements, his meals ratios for his industry were just too high, and it was a red flag for the IRS. There's certain benchmarks that are looked at by the IRS to avoid audits. And if you're not getting this information on a regular basis, that could be you that gets flagged, and no one wants to be flagged by the IRS. So The term variance means the same thing in accounting. It's a difference between two items. It's a variation. So another thing your accountant should be doing, it's what's called a P&L variance analysis. And basically it's just saying if your let's do an expense. Let's just do the meals and entertainment. If your meals and entertainment was $20,000 in January and then it was $80,000 in February, I hope your accountant can explain why, because they better be able to. So anything that's material, and in fact, most accounts will use a percentage plus a dollar amount, like a minimum difference that is acceptable in their world. And if that variance is over that percentage threshold or over that dollar amount threshold, it needs to be investigated and thoroughly explained to you. So when you are doing this P&L variance, let's just use that example. If I cannot explain to you why your meals and entertainment went up that much, then I'm not doing my job. It could be as simple as your bookkeeper accidentally put a different expense in meals and entertainment that was actually not meals and entertainment. It could be that simple, but it needs to be explained and it needs to be corrected. So after all is said and done, if you get all four of these financial statements, you're reconciled monthly, you can know that you have accurate financial statements. And what does that mean? That means your tax filings are accurate. Yay! Avoiding the IRS again. And if you use PTA, if your tax filings are accurate, we're going to be able to maximize your tax strategies. I remember, Curtis, I think I used last time trash in, trash out, right? So we can't optimize our tax strategies if we're not given 100% accurate information. And also, you wouldn't believe it, but having accurate accounting significantly reduces your internal fraud risk. I've been on several cases where partners are stealing money and it was found through accurate financial statements. So as I said, you're going to find more tax deductions. You're going to be able to strategize to increase gross margin, net income, and reduce cash flow problems. If it's July and you don't have a financial statement right now, how are you able to tell anybody that you're running your business at the best way possible and optimizing your revenue and mitigating your expenses? You're not going to be able to do that because you don't even have the information. And you'd be amazed at how many duplicate vendor payments are found through accurate accounting. I had one client who had paid rent, his bookkeeper had paid rent twice over 6 months. It was a very, very expensive rent payment. And ironically, the landlord never called and said anything. But then when we did the books and that popped out through a variance analysis, what I was just telling you, his rent just skyrocketed. And so we were able to get all of his money back. And a little apologize to the landlord, but so one case study, I was able through P&L variance analysis and doing all four financial statements, I discovered that a 50-50 partner had already stolen $2 million of the partnership's money. I then became a key witness in a 2-day deposition, and the damaging evidence was so bad the partner within 2 days was forced to give up all of his shares, or else it would end up in a trial that was probably worth more than his shares. So what clients are going to be the best fit for my team at PTA? Well, it's going to be small to medium-sized enterprises. So the revenue range definition for those are annual revenues between 1 million to 100 million. Usually when you surpass, you're going to hire a full-time CFO, a full-time accounting team. You might even be you might be starting to look to go public, and that's when you really need an internal team. So we really are going to be the best sale to small to medium enterprises. Businesses in the growth or expansion phase where financial complexity is increasing because they haven't had all these transactions. They need someone to help them how to categorize these transactions and account for them. And very importantly, a firm that's lacking a full-time CFO, but needing that strategy and oversight, but just simply can't afford a full-time CFO. CFOs make a lot of money. I'm sure you guys are aware, but that's why it's called fractional CFO. It's saying that I don't need one 40 to 80 hours a week. I might need one 10 hours a week. And that's where the word fractional CFO comes in. And so along with that, honestly, companies that want that financial advice, but like I said, just can't afford it. So what are some of the pain points I've observed from some of the ideal clients is the need for accurate and timely financial reporting, which we've pretty much thoroughly discussed in the previous slides. And those financial reporting numbers for a lot of small businesses need to be provided to investors and banks. A lot of small businesses have loans, and those banks require accurate financial statements to keep up with the loans or even get them. And then ensuring compliance with financial regulations. There's so many different IRS regulations, financial regulations that aren't known about. I mean, just simply filing your 1099s. A lot of small businesses don't know if they have 1099 contractors and that they have to submit those filings to the IRS or they can be fined. So correct accounting practice, as we discussed, ensure the accuracy, reliability, and integrity of an organization's financial information. Your financial statements and therefore your tax filings are accurate, which means you can do better tax strategies. And the risk of internal fraud is significantly reduced and or even eliminated. So again, more tax deductions are found, and you can increase your gross margin, net income, reduce cash flow problems, and you can reduce expenses. At PTA, we offer 3 tiers for my team services, which would be basic accounting, and that's just to get your books and records in place. Mid-tier, where we add giving you KPIs, which stands for key performance indicators. So there's all these ratios you can do on the financial statements that tells you if you're healthy or not. And then also if you need payroll compensation support and or 1099 preparation. And a full CFO tier would mean that you're getting budgeting, forecasting. I'm going and I'm looking at your expenses. I think one of my favorite examples is I had a logistics client, a manufacturing client, and my biggest joke is, why is IKEA so cheap but takes you 50 hours to put together? It's because they do flat boxes. They do flat boxes because you can fit 50 of those in a container from China or wherever they're made versus 5 fully made bookcases. So just by, I was able to go into that client and reduce their container costs and increase their gross margin. So that's something that a CFO would be doing, not a bookkeeper. So how any of your clients would get started with us is once they want to meet with me, it's a free meeting. We just go over, our services, and I ask them about what their needs are to see if there's even an initial fit. And if there is, we will go on to a business questionnaire, which I basically am trying at this point to find out the complexity of their business, the complexity of their transactions, if they have an accounting system, or as we said, zero-based accounting system. And after that business questionnaire, I then go and I determine the services that are needed and what we will price them at. I send them over those numbers. And then if we agree, we just get started right away and get their books in shape. So that's mainly the reason we put this slide in is that's the number one thing we're doing for most of our clients right now is starting out just implementing an accounting practice and software and teaching them how to use it. I would find that's the best place to start and the biggest need from what I've seen from the people that Better has sent over to us. Just to let you know, again, I was talking about the complexity. So if you are service industry, I only take 20 minutes. If you are in inventory, manufacturing, that's a longer questionnaire. Very, very different industries have very different complexity of transactions. And so that's basically what we do. And we would love your help in sending us more clients. It's been going really well. And that's the end of my presentation. So I'm open to any questions that anybody might have.
That's awesome. And Pete, it's so funny that you just chimed in because I think that your insight into this, because you're obviously, you're one of the higher earners on the Better platform, just in the sense of what you've made at Better. But what's your experience been like so far working with the prosperity team, but then obviously specifically, what is Stephanie? You guys have spent some time together digging into your own personal situation.
Hi,
Would you
Pete.
please
Hey, Stephanie. Yeah, I mean,
shed some
we
light?
all have strengths and weaknesses, and I'm just I kind of go and I do, but sometimes that can make a mess or what have you. So I can make money, but am I accounting? Is it all in order? And so, quite frankly, all of mine wasn't in order. It wasn't all in a shoebox, but um, so basically, in short, to answer your question, Stephanie basically helped me get everything in order. QuickBooks, she's doing every month. I'm getting everything is getting categorized and making sure it's in the right place. Um, and so it's basically keeping my butt in line so that I can pay less taxes legally and I'm gonna be more profitable. I know where my money's going and so it's running my business more like a business, right? So and hopefully that helps.
Yeah, that's awesome. Very good. Well, thanks, Pete, for that. Any questions? I see Miguel has a question. Wow, does our I Decide presentation hint on the three levels of service? No, and I think the main reason for that is that the obviously the I Decide presentation part of the plan is you don't want to overwhelm them with too many questions and then that gets them too specific. But in addition to that, it would be very hard for us to really hone down to those three tiers in a conversation that's not happening with a real person, specifically with Stephanie. So the I Decide really just hints at the fact that there are different different services that they can work with someone on. So Miguel, feel free to elaborate a little bit on that with your clients, but I think partly the main thing, and I want most people to be thinking with this with almost everything with Better, you have to get good at what is the introduction to this topic. How do you get into the topic of, hey, do you feel like you're getting sufficient amount of reporting from your bookkeeper? Do you feel like you have enough insight month over month on the health of your business? Do you feel that your bookkeeper is doing it correctly? Do you have 100% certainty that your bookkeeper is reconciling all accounts? Think questions like that. That's where you want to live. The reason we're diving into this level of training is we get it. If you don't understand it, then you're gonna have a hard time having the confidence to go talk to a business owner because you're like, well, what if they ask me a question? Well, the good thing is you can also say, well, here's the thing. I'm not a CPA personally, but what I think is the fact that, we've been talking about this for a minute or two now, it probably shows that there's need for at least, let's give it a second look. I think it might be worthwhile to have at least a discovery call with them. That's the level that you want to make sure you're interacting with them. You don't want to give advice that you're not necessarily qualified to give, but if you understand these topics, you can know when a client does need to schedule a call and you're there then to help them through that process. I think that's probably the most important piece of this. Kathy, where would I find this presentation? In an appointment with Stephanie. That's where you would find this presentation is when you're sitting with Stephanie and your client in an appointment. Point being is I don't necessarily think it's wise for everyone to go out and do this as a presentation with their clients. The second they ask any level of questions, you're gonna be in hot water. So if you want to reference it, the recording of this call will be up probably today. So you'll be able to look back and kind of go through some of the slides on that for sure. And then, yes, let's see. So Stephanie, I know also there is some sort of a small business startup package that the team over at PTA has been working on. Do you want to shed some light on that? I know we also have Mitch on the call, so I think that would be a good piece for everyone to understand, because I don't want everyone to assume that, hey, I'm not above $1 million in revenue, so I'm not a good fit. So where does someone start below?
Mitch, do you want to speak to that, or if Mop is on?
I can speak to that. I can speak to that. Let me
All right.
Oh, there's
okay.
Mike.
All right, hey guy. All right, so yeah, so the small business startup package is something that we rolled out a couple of weeks ago. We've been getting a lot of calls from small business owners that are really around 80,000 revenue, 100,000 revenue, maybe under a certain 150,000 in revenue, right? Within 1 to 2 years of their business, or just starting part-time and then getting it into it full-time. And so what we decided to do is provide a package that I think is conducive to these small business owners, and we were providing some basic accounting with Stephanie, per month. So there's monthly accounting involved, and then there's core tax strategies based on obviously their net income profit, right? Which tends to be a lot smaller, but they don't really have a lot of expenses. And so an example would be a small business owner that came to us a couple of weeks ago. She owns a stretching company here in Tampa, Florida. She just kind of broke out on her own as an independent entrepreneur. So she's got to deal with all the new entrepreneurship, expenses, and then trying to market and grow the revenue. But she does about 80,000, right? And her profit is about 50,000, which in essence, that's a pretty good ratio. Tax liability at roughly 20% or 25%, you're looking at almost, 10 to 15,000 unnecessary taxes. So we could, for our startup package, we start at $6,000, and it's a flat fee for the year. What it includes is monthly accounting and core tax planning strategies, set up with QuickBooks. And I think there's a few other items that are on that flyer that we can provide to Curtis, and he can pass that around. And so what that will do is that'll knock out by far, and whatever the tax liability would be between 10 and 15K. You get a QuickBooks set up online. You'll get the monthly accounting, the financial statements, the balance sheet, the equity retained statement, as well as the P&L, all done correctly for your business. And so then as you go from 80,000 in revenue to 250,000 to $500,000 and to $1 million, you're going to see that once you're set up correctly along the way, it's going to make it much more advantageous for each business owner to continue making sure that their books are done correctly and their financials are done correctly. And so I think that's what it is, 6,000 flat fee. And again, we can roll out the definitive numbers on that one page which we have. And so I think that's something that would be very helpful. We get asked a lot, and our tax liability is typically 50,000 or higher. And it probably will go up a little higher from a firm standpoint. We closed 3 clients last week for a total of 5 million or close to 5 million in tax savings, and from 3 clients collectively accumulated. So we have the experience, we have the specialty in all different areas, and we have the experts from the committee standpoint. So, but we want to help the small business owners as well, instead of pushing them off to the side and saying, hey, you don't qualify with the $50,000 tax liability. So anybody that tends to have, again, a small business startup, what defines that? Well, that could be a couple of different things, but typically somewhere between, I would assume, 150K revenue and less, that we can help.
That's awesome. Thanks, Mike. And I'm not going to pretend that I didn't obviously know about that, because we've talked about it a bit. But here's partly why I wanted to make this point. Sometimes I hop on these calls and pretend, Stephanie, what does that word mean? When I'm really doing it also because I want to make sure that everyone understands we've been working very closely with Mike's team here, the PTA crew, because we've seen it on our large clients that it helps a ton. But we're starting to see that the better audience, and some of the better audience are massive clients, but some of you are sitting here understanding the power of what PTA does, and irritated that you don't necessarily meet that higher point of entry. And we wanted to make sure that there was something that we could do to make sure that you get all the help you need, because every one of you in here, you have the potential. And it's not a guarantee that it'll happen, but you have the potential to become a big client, a big earner. You could, through better, make, a chunk of money. You could make that through your other business. And some of you were on the sales call this morning with me. better is not just about the better services. What I mean by that is that sales call, we were talking about some financial strategies or sales strategies in the financial industry this morning. We were talking about, elements of sales that have nothing to do with better. The point is, we're not necessarily sitting here going, the only thing that you're going to get out of better is selling something to a client. What we also want you to have within better is the ability to become a better businessman, a better businesswoman, a better, you have a stronger core in whatever you call your core. So if that means that maybe your main line of work has nothing to do with any of the things that we work on in better, maybe you're a chiropractor. Well, guess what? You might be in the business, you might be in the better space because you're like, I seem to learn a lot about basic business practices, marketing, sales. The point is, better is for you to become more capable in whatever line of work you choose. It doesn't, again, we're not just here to sell. We're here to provide value to you. And I think that, let me know. I want to know. I want to make sure that we're on point here. Do you all see value in the training we covered today? I don't want to assume you do. I'd love to hear from you. Do you let me know in the comments. What did you find? What was the thing that you found most valuable in today's training with PTA? Monique, that's fair, most definitely, because I did ask, was there value? And then I asked what? Yes, reconciliation. Awesome. Yeah, learning about reconciliation. What other things? What other things did you all find valuable about what we covered today? Structure. Great. Mitch, yeah, no, long answer. Good. That I see that's to Miguel. Okay. 2 people answered up. Did anyone else find anything of value today? I know that sometimes we get a little lost in our what we're doing around the call, but what else did you all find valuable about today's call with PTA? Did you learn something? Way to reconcile. Okay, chance for companies to fight against incorrect accounting practices. Yeah, expertise is needed for the IRS. Ain't that the truth? It's they don't play very nicely. So yes, it's true. If you want to survive any future bouts you might have with them, it is always good to have that expertise on your side. Yes, how to balance it out, saving money, importance of accurate accounting. Can help avoid fraud and find more tax deductions. Yeah, that's amazing. And I'm sure every one of you do recognize that all of these points that you're saying apply to you and any potential clients you have. So this service is something. Mitch, can you go ahead and throw your info in again? Because I want to make sure that everyone knows where they can go to if they're, I don't know, maybe you find some of this stuff interesting. Maybe some of you, this is not your cup of tea, but assuming that you're in here 50 minutes later, most of you probably do find this somewhat interesting. So reach out to Mitch, but then also what I would suggest, instead of using that protax.ai, what you should do is go to your Better back office. Let me share my screen really quick so everyone can see. Go over to, so if you log in, betterincome.com, you can scroll down to Prosperity Tax Advisors. Use this link. Use your link because it's custom to you. That way we don't want to lose anyone. We don't want to, I don't want you to accidentally just send it over and then Better gets credit, but you don't. That wouldn't make any sense. So use your own personalized link, because what this does is it bakes in the code that's unique to you on the back end. And then as a result, we'll make sure you get credit. We don't want you doing work for nothing. So make sure to reach out. Who sees some of these services are going to be useful to your clients? Or you think that maybe a couple of your clients might be interested in something along those lines? I do. Awesome. Tons of thumbs up. Awesome, Miguel. What other questions? We have 10 minutes here. What other questions do you have? Maybe anything that you feel you're missing as an understanding in order to refer yourself or clients. What questions do you have? I want to specifically help you learn how to get into action on this topic. this can be a topic that freezes you up if you don't understand it. So that's kind of the whole point of this thing.
Curtis,
Mitch, I
we did
saw
have
you
a
unmuted there.
question.
Did you want to fill something in?
We did have a question asked back. What entity should we start with was one of the questions that we had on there.
I'm assuming by entity they mean service. Where's the
I
question?
think it sounds more like what entity, which meaning like if you're going to start up your company, do you start up with an S corp, a partnership, LLC? Which obviously, really, we can't answer that question without getting more details to what they mean, but that's what they asked.
Okay.
Yeah, I mean, by default, definitely an LLC would be the first place to go. I mean, I wouldn't even do a sole proprietorship. LLC would be the first place. S corp is later on when you have, and again, there are conflicting responses to this in the industry, but I say personally, when you have about 100,000 or plus in net income, 150,000 or higher, I think the S corp would be a better transition or upgrade to. But some other people say 50,000 the net income in the industry. So it just has, there are different answers, but the first place is an LLC. Start with that with an asset protection entity in its place, which you'll get. A sole proprietorship won't get that. So you'll protect inside liability. Now you'll still be exposed to outside liability elements, litigation, lawsuit, but at least from the beginning start of your new entrepreneurship roadmap, you'll protect whatever business you're doing. So LLC to start with. If you got partners, it'll be a partnership. Start there, and then contact us, to make sure everything else is organized, structured, protected from any outside inside liability, litigation, lawsuit, or whatnot.
Awesome. Miguel has a question in here. How do the costs of services compare to what's available in the industry?
Speak to that. I alluded to it a little bit. So a bookkeeper market range for them is about $25 to $40 an hour. They're going to be cheaper. They're going to be a lot cheaper. Fractional CFOs can range anywhere from $100 to $400 an hour, depending on their expertise. So in convincing or trying to explain why that extra money is worth it is because of what we just presented. Another case study, I had one client who said, I'm gonna pay my bookkeeper $20 an hour. I'm fine. I don't want to pay all that much money. I'd rather hire some salespeople. And then he got a audit liability notice for $825,000 because his bookkeeper simply didn't know sales tax use laws. He hired me, got that down to $20,000. So these are the type of case studies you want to explain in why you need to spend more to honestly save yourself more. And Mike and I always say this, and Mitch will say it too. You hire my team, he's going to have the accurate data to do the tax strategies, and his tax strategies are going to pay for my team.
Yeah, and I want to shed a little light on this too. I'm going to be a little bit more direct and to the point in an aggressively, slightly antagonistic way.
Okay.
And everything that you said, Stephanie, is 100% right. So don't let this come across in anything but that. But the fact of the matter is, I've sent over a couple dozen clients. Some of them, one of the clients, even my sister sent over, said in a meeting, I'm totally okay with my client paying extra taxes because he just was either allergic to the work or just didn't know how to do the strategy. So it was outside his comfort zone. So he was sitting there saying, I wish that my client didn't do any of this and just paid more tax. Yeah, great accountant. Yeah, thanks. I left that out of the story, jerk. Let's just say he's not going to be my accountant for much longer.
But folks,
no, and here's what
he literally said that. Literally said that.
Yeah, he literally told. Yes. So, and then I've seen some of my clients' bookkeepers get defensive and try and justify what I've seen also clients leave the appointment and get all like, They go and try and get their opinion of their CPA, and the CPA basically poo-poos any kind of concept of saving money on taxes because I don't know, I guess because they're trying to hold on to their $1,200 or $1,000 that they make from that client, leaving out the fact that in a lot of cases here, we've kind of gone backwards to go forward. So the point is you obviously have to have proper accounting in place to do any kind of strategy. But if you're sitting there looking at doing strategy, the entire aspect of that is it's not simple. You have to have right data to do it. But even once you have right information, right data, good data in, good data out, right? There's no way for you to save money in taxes if you listen to your CPA who's happy with you staying at whatever level you want. You're obviously, if you have a client that's looking at doing something like this, they are going and sitting there saying, I feel like my business is ready to evolve and become more sophisticated, better with its finances. And if you let them sit there and listen to their CPA, who maybe they've outgrown at this point, what's really happening is their CPA is trying to hold them back from becoming a better business. It's sort of messed up to look at it like that, but that is what's happening. If a CPA, if a company, or if you have outgrown TurboTax, H&R Block, it might be time for some of you to pull up your big boy pants and jump to this next level. And you might have to have a little bit of that conversation with some of your clients, or you might have to have that conversation with yourself and recognize that if you want to take your business to another level, and again, this has nothing to do with better referrals. This is you as a business owner. I'm sure most of you, better is your side. That's what you do on the side, or something you found in better that helps add to what you do with for your clients. The point is, if I'm sure most of you want to take your business to another level, maybe some of you are fine. And if you're fine, that's great. But the whole point of this is to recognize that in order to really increase the effectiveness of your business, you probably have to increase the amount you even understand about your business. If you don't know what your profit and loss looks like, if you don't know that you have assets and liabilities to go on a balance sheet, it might be time for you to up your game. It gives you an insight that is way greater than probably what you have so far. So I would strongly consider, if I were you, to at least ensure that the clients you have, or yourself, that you take a look at some of this and see, am I ready, or are my clients really ready to take their business to another level? Because understanding finances and understanding the money of your business is a vital part to being able to take it to another level. You don't even know if you can scale if you don't understand your cost to create whatever service or to deliver your service, and then all of your operating expenses. You don't know that you have even a scalable business. If you don't understand those pieces, you don't even know if you can scale. You might need to readjust your pricing model. Some of these things are fundamentals that if you don't understand them, you're going to have a very hard time scaling your business. Am I right or wrong on that, Stephanie, Mike? I want to make sure that I'm not driving them in the wrong direction.
You're absolutely right. I mean, I can't even tell you how many Fortune 500 companies eventually, or at once, were in a basement with 3 to 5 people. And yep. I mean, and then when it was time, I mean, Mike and I would even tell you there'd be a time where I'd say, you can't be on QuickBooks anymore. You have to go to SAP. You know, it's all about growth, and you want your CPA to be supporting that growth, not hindering you.
That's awesome. Yeah. Great. No, that's perfect. I challenge. I want everyone to take. I want you to take a moment. I want you to take a moment of self-reflection right now. I want you to look at yourself as a business owner. And I want you to ask yourself, okay, 1, do I have the wherewithal to, or any kind of business momentum that would justify me even thinking about a concept of doing something like this for myself? And you're going to understand why I'm saying this in a second, but I want you to take a second and go, okay, do I make money? enough that I could afford a service where I dive in a little bit more into understanding my financial situation, okay? So I want you to assess, do I have the means of doing that? It's the first question. The second question I want you to assess for yourself is, if you do you have complete and utter certainty that you have all the insight into your business with your current system? If you don't know without a doubt that the answer to that question is yes, if you're sitting there going, I kind of think I know how my business goes, that doubt probably tells you that you need to understand your business better. And what I challenge you to do is, if you have the means, like meaning you could afford it if it made sense to you, and then you have either a shred of doubt or you know for certain that you need something like this, I want you to schedule a call at minimum. And here's why. For two reasons. One, I want all of you to at least know that you're running a profitable business as a general practice as a business owner. So that's one thing. But then second thing, I know that if you look at the process, even if you don't go forward with it, even if you look at this process, you will understand it better for any potential referrals, any potential clients you'd like to send over, because I guarantee every single one of you at least knows someone on both of those services that would be a good fit. Maybe you know someone who's a startup type business that needs to understand their financial situation better, or maybe you know someone who is paying over 50 grand in taxes a year. At any rate, look at it for yourself. If you feel like this is something that you could qualify for, that's one thing. And I want you to do this as a point of integrity, because you are professional businessmen and women, and we want you to treat yourself and your own business like you actually would want your business clients to treat theirs, okay? So do that because you owe it to yourself. And then from there, I'm sure that you will end up making so much more money from even this relationship with PTA, because you'll understand what they do, and then you'll refer clients, and then you'll make more money. It's kind of a self-fulfilling prophecy. So I kind of like that concept. So I am challenging everyone who is on this call, look at it for yourself. If you think there's a possibility, there's a shred of doubt that you could qualify for this, I don't care if you already know you don't want to go through with it. Book a call so you can understand what's going on. I am challenging everyone on this call to do this, okay? Because that is what Better's all about. It's about increasing the quality of business, not just within the Better referral platform, but as a business owner, you have an obligation to do your job well, okay? So we want you to do this, and if nothing else, because it'll make it so you're more aware of what's going on. So, sorry for that soapbox. I apologize. Looks like Mitch answered that question. English only. Yeah, Pete, my former CPA of 14 years did hardly anything for me except charge fees with very little services. You get what you pay for. Good Lord. Vicious. You should bring him into Better. Maybe he should refer some clients to PTA. All right, great. Any other last questions before we hop out of here? Actually, no, I'm a fan of accountability today. We did that sales call this morning, and that got me fired up. If anyone's not on Pro, get on Pro, because our sales calls Monday, Wednesday, Friday morning are going to be absolutely amazing. But yeah, I want to see in the chat here, who is going to book a call with PTA? Pete, you already count because you're leading from the front. But I want to see who here sees that they are either going to book a call for themselves or book a call for a client they know, and that they're going to get it done today. I want to see who's actually going to really show up and make a difference either in their own financial life in terms of their business, or for a client that they know they've got a client that, you know, is actually ready to, you know, move forward with a service like this. Let me know. Say me in the comments.
Can I ask a question real quick? What
Yeah.
does everybody do in here? Are they financial services, insurance?
Go ahead and chime in, folks.
Telecommunications, nursing, Medicare, healthcare. What
and
do we...
Lisa, yes, me and my team. Good. No, but yeah, put your... Good. Sorry, we're asking people two questions all at once. Feel free to answer both questions.
So Jason, and I'm assuming most of you are in this financial services industry. You know what your clients are paying in taxes, right? in order to do financial planning, unless you're doing just insurance only, but you still got to get some of the financial data, tax returns from previous years. So even if you go through your client list and just briefly look at some of the documents that you guys have, that you should be knowing your clients, right? Information, and see what they paid. Line 24 of the 1040 return will tell you their total tax. So it's very easy to go through all your clients. I guarantee you that you're going to have 10% or more that are paying either north of 50,000 or around that number, even if it's 20 to 50,000, right? Some of them can qualify for our startup program, and some can qualify from some advanced tax planning strategies. But keep in mind, our startup program is very basic core tax strategies. It's like a limited amount right there that'll knock out a smaller tax liability amongst having QuickBooks set up. If it's not set up, if it is set up, it's going to be set up correctly, and then it's monthly accounting from there. So it's all included in that startup, right? Somebody's talking. So anyway, yeah, you guys all have access to your clients' information if you're especially in the financial services industry, like I am, as well. So, just take a look at their line 24, the 1040 returns, and that'll tell you all that you need to know. Then give them a call and just say, I saw here, we got a great relationship with a new partnership tax planning company. They're not here to disrupt your existing accountant team. But I see that you paid $30,000 in taxes last year, 100,000, 80,000, whatever the number is. Would you be open to having a phone call where we can actually reduce that tax liability further, possibly to zero? Would you be open to a discussion with our partner team? And that's it. And then set up the call. I mean, it's as simple as that. Every one of you have these clients. I've been searching, and I know these clients for the last 2.5 decades since I've been in private wealth management. That's why I created a tax planning firm that's very unique and different from the existing accounting firms out there. Example, and I'll end on this. I don't want to keep doing the commercial here, but last week I had another wealth management guy. Last week, he was referred to me by another organization that actually Kim is part of, Curtis's sister. It's another FMO. And they referred me to this individual who's out in Texas. He's a private wealth guy, 300 AUM, 300 million in AUM, right? He's doing about, I think he'll do this year, 6 million in revenue. Now, what he's doing is taking a portion of his book and converting it into annuities, right? And then, so of course, that's raising 3-4 million in annuity business. I think he's doing almost 20-30 million in annuities. Well, there's no expenses in that particular lineup there, right? From an annuity standpoint. So he's going to pay almost $2 million in taxes. He's a wealth management guy in my industry, some of your industries. So, and now he just signed on today, solidified, and we're going to save him 1.8 million in taxes this year, and then continue moving forward. So now he's going to go to his clientele that pay more than 50,000. He's going to use himself as an advocate, and how we're able to do this. Now, he talked to multiple tax attorney firms, multiple accounting firms throughout the state of Texas and southern states. And a couple of things he found out is, one, he was getting very shady tax strategies that he was just not comfortable doing. And the second thing he asked him is, do you stand by your recommendations? And every single one of them said no. Right? They provided to you, either you do the implementation, you do the document, you do the substantiation, right? And you deal with the IRS. But we'll give you the strategy and how to do it and how to save it, right? What we do is all of the above plus audit assurance, right? And that's what makes us unique from everybody else, is that if I'm going to put my team on call, if the IRS has any questions about any of the strategies we do, we need to do it perfectly, right? And so that we respond to the IRS for you as a power of attorney, which you'll sign off on. And then we answer all their questions, and I use my resources, my team, to make sure that this gets answered in the proper manner, and then we move on, right? Where every other single accounting firm won't even touch or stand by any of their recommendations, don't even know how to have recommendations from a tax planning perspective. So there's an example of a guy last week from your industry, my industry, previous industry, and I'm still able to save him $2 million. So keep that in mind, folks. You do have clients within your book, I guarantee you, is paying 20,000, 30,000, 40,000, 50,000 or higher. And you will do good in their eyes. And I promise you, there are other strategies that will incur additional revenue for you guys, whether it incorporates insurance or advisory services, if you do advisory services. It'll open up opportunities with that same client that you have not gotten those additional resources from. But based on tax planning side, it'll open up the door to those additional resources where you can charge 1.5% of advisory, services for them. So just keep that in mind.
Thanks.
Excellent. Was there someone who unmuted there? Sorry. All right, good. Well, let's wrap, because we're well over the mark. I think obviously we've covered really the accounting side. I hope that was of value to everyone. Stephanie, thank you so much for the deep dive on that. Mike, thank you for also just laying out, kind of like, call it a service that's a little bit more of an entry level for most people, and I think that'll help a lot of individuals, business owners. So appreciate that. And this is one of those things where it takes a little bit to learn what's going on this side, but then once you really get going, you're going to change the way your clients look at you, which is going to be a huge change. If they look at you as someone who can not only help them invest funds and get closer to retirement goals and achieve, life goals that they might have that are investment centric, but then also on top of that, they can look at you as the person who's going to free up the cash flow to invest through tax savings. That's obviously going to differentiate you in a big way, and everything you do. And think about how much easier it is for them to also refer to you if they go, yeah, you got to work with my guy Pete, because Pete helped me save X amount in taxes with one of his partners, and then showed me some amazing strategies to use. So use this as some tool to differentiate yourself in the industry, and I think as a result, you might like where it takes you. You might see that this is a game changer for you, and I hope it is. Again, better is not. We're here to help you raise the entirety of your business, your business life, not just make more better referrals. That's not our thing. So I hope this has been useful for you. Next week we're gonna dive in a little bit more. We're gonna look at how much we want to dive into the expense reduction side, Steph. Maybe what we do is we cover a little bit also of that entry service that Mike, you were mentioning. Maybe we do a double header on that one. So at any rate, thank you again for everything, for hopping in and training these our better guys and then better audience. Thanks for listening and being part of this community. You're what makes it great. So we'll see you in the next training. Take care.